It is quiet on the trading floor today, and it's the best time to also quietly start positioning trades for 2026. And here to help us out with that, we have Japhet, Tantiango Research Manager over at Philstocks. Japhet, good morning. So excited to be seeing you here.
Morning, Ma'am Dani. Belated Merry Christmas, advance Happy New Year, and thank you very much for inviting me.
So happy to see you. And yes, happy holidays. You're still in the thick of holidays, but it is a quiet day today on the trading floor. So thank you for joining us. But let's talk about what happened yesterday. Some people were hoping for a last minute rally, bargain hunting, but that's definitely not what we saw. Can you give us your insights on that? Are you disappointed? Did you expect that?
Well, if you're going to look at the local market's performance yesterday, it was in the positive territory for the most of the day. So we can say that there's been bargain hunting. Some investors took positions ahead or in preparation of the year ahead. However, the in the final minutes, so the local market declined. So we really saw some, last minute selling yesterday, which goes to show that ultimately cautiousness prevailed. Investors' cautiousness prevailed. Investors are still not that positive with respect to the year ahead, particularly with respect to our economic outlook, and that is why the market still ended in negative. Also, if you're going to look at the value turnover, it's been thin, which goes to show that many have stayed on the sidelines while waiting for what's gonna happen ahead.
All right, so this cautiousness that you're mentioning, Japhet, can you attribute it completely, as the CEO of the PSE, Ramon Monzon, said, completely because of the corruption issue, or are there other things here in terms of our corporates and our markets that are in play?
If you're going to look at fundamentals, corporate fundamentals are still sound. It's still doing well. Many of our companies are still posting higher figures compared to the same period last year. Not as fast as investors would want it to be, but still they're growing. I and bargain is still there. I mean, if you're going to look at the local market, price to earnings ratio wise, we are below historical as well as regional average. I believe what's really triggering, or what's fueling that cautiousness on the part of investors as well. Number one, correct. It's the corruption issues here in the Philippines. More so, its effect, or its anticipated effect on our economic outlook. I mean, we already had a taste on the third quarter of 2025. GDP growth has been slow, dragged mainly by investments, particularly public infrastructure spending. It could also happen in the fourth quarter 2025, and if it's not resolved, then it might continue on towards 2026. I believe this is the main thing that's triggering investors' cautiousness. At the same time, if you're going to look at it on the part of foreign investors, they're also cautious with respect to the local currency. I mean, our local currency has posted weakness this year, and foreign investors don't want that. And so, if peso continues to depreciate, then foreign investors will also be cautious towards us. And then, if you're going to position the local market with respect to the global market, I think another thing that investors are watching out for is the structural changes here in the country. I mean, we've been left behind by our peers because of, this artificial intelligence trend, which apparently we don't have that much. And so investors are looking towards next year. I mean, if we still don't have it, then rather just, invest abroad rather than staying here in the Philippines.
Japheth, let's talk about the fundamentals. You mentioned profitability of the corporates. Give us a good summary, an easy to digest summary of the past year when it comes to the earnings of corporates. Which sectors were disappointing? Which sectors surprised on the positive?
Well, if you're going to look at, well, let's just look at the index members for now. If you're going to look at the index members, If my memory serves me right, more than 20 of the 30 companies, I believe 24 were still able to post good figures. Or
Okay.
when I say good figures, they were still able to post higher bottom lines compared to the same period last year. We're basing this on the first 3 quarters, the first 9 months. And of the 24, many were still able to post double digit growth. If you're going to look at it sector wise, the banking sector, they weren't able to, it was a mixed picture, but overall, many were still able to post higher numbers. Same with the property sector. Even with the conglomerates were able to post good figures. With respect to the telco, we've seen a slowdown with respect to Globe and PLDT, but Converge was still able to to grow their numbers. It's a mixed picture if you're going to look at earnings, but in general, many were still able to post good numbers.
Okay.
Other things, other notable things. Well, if you're going to look at ICT, if you're going to look at Pure Gold, which are representatives of what of our trade as well as our consumer retail sector, they were able to post good numbers. So fundamentals are still sound if we're going to look at it based on earnings.
What about the pullback from foreign investors? So net foreign selling for the year
Yes.
47.13 billion. That's up 86.6% year on year. So painful. What
Yes.
are you expecting for 2026? Will we even get that amount back?
Well, the problem right now with respect to the local market right now, we can say that I can say that we're almost dried up with respect to foreign investments.
Wow.
Many foreign investors have already. If you're going to look at the figures, not just this year, but even in the past years, we've been continuous in respect to net foreign selling. And so foreign investors has been continuously leaving us. I mean, if they're going to enter into the local market, it's just for trades, not for long-term investments. They're just going to flip it. I mean, that's yeah.
Okay.
So that's been the correct. So as far as we can see with the numbers, that's how foreign investors are just doing. With respect to narratives, do we expect them to get back? Well, again, it depends. Number one, will the corruption issues here in the Philippines be resolved? And more so, will our local economy, in terms of growth, get back on track? Will the local currency strengthen? And finally, will we be able to see structural changes here in the country? Will we be able to, if not catch up, at least start with respect to that artificial intelligence narrative or that AI story? I think this is what foreign investors are looking for. And if they don't see them here in the Philippines, then the little that we have, they might still pull out, or they might just not invest here in the Philippines.
What is your outlook on the rate differential that's going to be happening and the impact of that on Philippine equities? When you're looking at the Fed, you saw the third quarter GDP of the US, very surprising, diba? And then their interest rates are not that far from ours. We are still in the easing cycle, but the BSP has said maybe that's almost at the tail end. Inflation is very low. So for next year, what are your indicators? What are you looking at when it comes to the rates to see that, okay, the equities are going to be doing better than this year?
With respect to interest rates, of course, what we're going to look forward to ultimately is the GDP as well as the inflation figures. These are the main determinants of interest rates or policy rates. But the BSP has already mentioned that they're already at the tail end of their easing cycle, and I do agree with the BSP that well, or rather, what even if you lower rates, I think it's not gonna be of much help to the local economy, given that more of our problems is stemming out of confidence, consumer and investors' confidence. So here in the Philippines, interest rates might not be moving that much moving forward. It may go down lower next year, but not that much. With respect to the U.S., of course, what we're looking at is also the same. Inflation and inflation and GDP. If inflation, if inflation in the U.S. continues to decline, and if GDP, declines too, then we may see further rate cuts from the Fed. But if GDP strengthens, whereas inflation moves up, then the Federal Reserve is expected to to stop their policy easing too. Now, you look at the two. If the BSP stops with the scenario is this: if the BSP stops with their policy easing and the Fed continues with theirs, then we expect a positive interest rate differential in favor of the Philippines, and this is going to somehow help the local equity markets. However, if the BSP stays as is and the Federal Reserve stays as is as well, then it's not gonna be of much help to to the local market.
Japhet, the million-dollar question that our viewers want to know, where should we be putting our money in 2026? If it's stocks, which type of sectors? Should it be, commodities? We're wild this 2025. Give us your shining picks.
Well, first I would like to apologize because I already sound like a broken record with this one. But well, first for long-term investors, we still advise them to be on the cautious side. And if we're gonna be cautious, then we're still gonna go after stocks that are good in terms of paying dividends.
Okay.
So that's really our advice. Stocks with strong fundamentals, but at the same time good dividend payers. Um, Now, for those who are into short term, there are some stocks that we are looking at, and these are stocks that they can trade, but they have to be cautious with it. Last year we've seen the rise of gold, and at the same time, gold connected stocks. If you're going to look at the performances of the likes of Apex, Philex Mining, OGP, they performed well.
Mm-hmm.
And so far, gold still has momentum.
Okay.
And if gold rises further next year, then it's possible that the gold connected stocks might also rise further. And so for traders, they can go for it. But again, caution is advised. Finally, as mentioned a while ago, the local market still at bargain levels. We still have a lot of stocks that are good for accumulation. But again, we really have to be careful. We really have to be careful. I mean, fundamentals are good, but given the sentiment, they could still decline moving forward. And so we really have to be cautious with respect to our accumulation.
All right. So stick to defensive stocks and, of course, be very,
Yes.
very good with your research if you want to take some more risks there. Thank you so much, Japhet Tantiango, Research Manager over at Philstocks.